Our first guest this afternoon is a distinguished member of the California State Bar. He's a certified tax specialist. His name is Dennis Brager. He is founder of the Brager Tax Law Group, a Los Angeles-based tax litigation and tax controversy law firm. He's a frequent lecturer on the UCLA Tax Controversy, I hope I'm saying that right, Institute, and at USC. He is a tax expert, been quoted by Business Week, Accounting Today, the Daily Journal, the National Law Journal, USA Today. He has appeared on Good Morning America, Fox Business News, TV1 Access, KABC, on and on. Now, again, at the apex of his career, he's on the radio in Fargo, North Dakota. Good afternoon to you, Dennis Brager. How are you, sir?
I'm well. Thank you for asking, and thank you for inviting me today.
It's a real pleasure to have you on, sir. So let's jump in. Everybody knows about this New York Times story about President Trump's taxes. Is this story factual, or is the president right when he says it's fake news, Mr. Brager?
Well, look, I haven't seen the tax returns. Nobody's actually seen these tax returns that the New York Times has gotten their hands on, but I don't think there's anything fake about it unless they've completely made up all of the facts in the article.
I noticed the way the president's lawyer issued the denial. We got used to the term the non-denial denial during the Nixon administration. They didn't say it was false or wrong. They said it was inaccurate. We just don't know what is inaccurate about it. So, Mr. Brager, how is it legally possible for Donald Trump to have paid $750 in taxes? That's less taxes than myself and millions of Americans for a couple of years in a row.
Sure. And a lot of this was done through what's known as net operating loss carry forwards. And let me explain what that means in English.
Okay.
Basically, what happens is if you have a business and you have losses in 1 year and you can't wipe out all of your income with those losses, you get to carry them forward into the next year. So in year one, let's say you lost $1 million. In year two, you earn $1 million. Well, you take that loss from year one, carry it forward to year two, and now all of a sudden, even though you made substantial money in year two, you've wiped out any income tax liability associated with that.
Well, that's a great deal.
Yeah, it is. And historically speaking, average taxpayers used to have that. Maybe 20, 25 years ago, they got rid of it, but they used to have something called income averaging, where if you had a good year, you had a bad year, you could average them all together and pay tax based upon your average income. But that got wiped out a long time ago.
And so how does Mr. Trump qualify for that, or is this part of his past taxes?
Well, part of it, New York Times reported that he had $1 billion worth of losses from the mid-'90s that he was carrying forward. And then more recently, it was reported again, and all this is based upon the New York Times reporting, so I'm not going to keep qualifying that. He had losses of $150 million from his 3 European golf courses, from his Washington hotel, and some other business ventures. And he used those to wipe out his income from his more profitable ventures.
So
he also, go ahead.
No, you go ahead, Mr. Brager. I don't want to interrupt you.
Well, I was going to say we don't know all the details of what these losses consisted of. But what we can say is that a portion of the losses are funded by money he borrowed. So he borrowed money, he put them into the business, he spent the money, and that generated losses. So he wasn't spending his own money. Another part of this is that there are some, deductions on the tax return that has been pointed out that are, maybe at least questionable. Again, we don't know all the details. But for example, there was about $750,000 in consulting fees that were paid to his daughter in 2017, which he wrote off on his tax returns. And what makes it also interesting is at the same time she was receiving these consulting fees, she was also being paid as an employee of the same entities. So it's not clear whether this is double dipping. It's not clear whether the work that she did was worth $750,000 or this was simply a way of transferring some money to his daughter and reducing his taxes all at the same time.
That is incredible. I was going to ask you to shed some light on his deductions, his write-offs, and his financial situations. Outstanding with his daughter not alone there, but did you find anything else about this story, about his deductions, write-offs, financial situation?
Yeah, there were a few interesting ones. He apparently took a deduction for $70,000 for haircuts that he received while he was on The Apprentice. So now we know why his hair is so beautifully coiffed.
I guess so. $70,000. I wonder how much the average American pays over the course of their life for their hairdos. You know,
I don't know, but I doubt it's $70,000.
I doubt it too. So basically, what we're saying here. By the way, we're talking with Dennis Bragger. Dennis is a tax specialist, and that's just really lowballing his credentials there. He's a former trial attorney for the IRS and founder of the Bragger Tax Law Group, which is a Los Angeles-based tax litigation law firm out there as well. So are you basically saying he lost so much money that he didn't have to pay taxes?
That's a lot of it, yeah. That puts it in a sentence.
Wow. So,
which, of course, is at odds with his public persona.
It sure is. I mean, the art of the deal, he got elected on the premise that he is a smart, savvy, tough businessman who has become a billionaire, and this country needs a businessman to run it because the United States is a business, and that's kind of showing that that's not really true.
And it certainly seems to be put in some doubt by these revelations.
Dennis, you are an attorney, a longtime attorney. In your opinion, were any U.S. or international laws broken based on this story?
Well, I don't know about any international laws, but in terms of U.S. tax law, first of all, I want to distinguish between criminal and civil violations. So you can break the law and do something incorrect on your tax return. It isn't necessarily criminal unless you did it intentionally and you knew it was wrong and you did it anyway. But on the civil side of it, there are certainly things on here which seem I'm searching for the right word, but I mean questionable, I guess, is the easiest one. There's the haircuts I mentioned. There's $100,000 that was paid to Ivanka's hair and makeup artist.
Wow.
There's $2.2 million in property taxes that he claimed, and this was property taxes that were paid on his 200-acre family retreat in Bedford, New York. And even though on his website it's referred to as a family retreat, it's been classified for tax purposes as an investment property. If it wasn't an investment property, he would be stuck like you or me, limited to a deduction for $10,000 worth of property taxes. And you may recall that was one of the big arguments in the tax bill that he passed for those of us in high tax states like California, high value homes. I don't know about high value. We pay a lot of money for them anyway.
Right, that's right.
And so that was, some people took that as a swipe at the so-called blue states, California, New York, some of the others. And it's just sort of fascinating that at the same time he was pushing this new change in the law, that he managed to write off this huge amount of property taxes on what at least appears to be a personal residential property of some sort.
Mr. Bragger, some people are interpreting the president's tax situation and paying so little taxes as something to aspire to, finding a way to creatively avoid taxes. We've just talked about whether or not they're legal or not. What are your thoughts on that kind of attitude?
Well, look, way back in 1934, a very well-respected judge who had the wonderful name of Learned Hand said that anyone may arrange his affairs so that his taxes shall be as low as possible. There is not even a patriotic duty to increase one's taxes. And I think I would subscribe to that view.
Okay.
I mean, if Congress passes laws and it allows certain things, then we should expect that people are going to try and, take advantage of that and reduce their taxes. I think human nature. If you don't agree with some of these, what people like to call as loopholes, well, it's time to let the Congress know that this is not what you want to see as a citizen of this country.
Dennis Bragger is joining us. We're running out of time, Dennis, but on the way out, I just wanted to ask you one last question here. Joe Biden has said he has a plan that will raise taxes on Americans making more than $400,000 a year that will stimulate the economy. Can you take a shot at explaining how that might work?
Well, I can explain what the tax increases are, at least some of them that he's proposed. I'm not so sure I can draw a straight line between the increases and the benefits to the economy. But what he's talking about is increasing the corporate tax rate from its current level of 21% to 28%. He's talking about the Social Security taxes that we all pay. We all pay 12.4% Medicare tax split between ourselves and our employer. And right now the cutoff for that is $138,000. So if you make more than $138,000, you stop paying that particular tax. And what he's going to do is bring that back for people who are making over $400,000. So it'll be like a little donut hole. You won't pay anything from 137 or 138 up to 400, and then over 400 you're going to start paying that 12.4% again.
Does that put more money in the economy then?
Well, no. I mean, it's pulling money out, and it's going into theoretically, at least, this would go into the Social Security Trust Fund and help shore up Social Security. I think that's the idea behind that.
All right. Well, I'm sorry we're out of time here, Mr. Bragger. I've got a few more questions for you as far as the IRS and tax deadline day. And there's no taxes on the stimulus check people received, correct?
That's correct.
Okay. Do you have any idea if there's going to be another one of those?
Boy, I hate to predict. It's hard enough trying to understand what Congress does. Trying to predict what it'll do, I think, is above my pay grade.
Mr. Dennis Bragger, who is a tax specialist, former trial attorney for the IRS, founder of the Bragger Tax Law Group in Los Angeles. Mr. Bragger, always a pleasure to have you on, sir. Your intelligence is wonderful. We appreciate you sharing it with us.
Thank you very much, Dan.
You bet.
You have a wonderful day.
Yep. Have a good evening.